Hi, everyone. Just wanted to provide a few concepts of just a brief discussion about some areas that we've been talking about in class, and to just give you a kind of a better overview. So, the purpose of this class is really, and I was chatting with one of you earlier today, and the purpose of the class is really not to make you accountants, accounting experts, financial officers, those kinds of things. Really, the focus is about giving you some of the knowledge base needed to understand why we use finance in healthcare and how finance in healthcare is a little different than it is in a lot of other places. So, so that's kind of the purpose. Um, was kind of stuck between a rock and a hard place, for lack of a better term, with some of the overall course objectives because they were much more financy and less healthcare financy than I would have chosen. But hopefully, we'll still be able to give you a good idea of the importance of healthcare financial management. And then you, in your MBA program, you will take another finance class if you haven't already. So you'll get some more focus specifically in finance in the corporate world, which 100% is applicable to the healthcare world as well. I was just hoping that we could focus more in this class about what's different. Didn't necessarily get the opportunity to do that in as focused a way as I'd wanted for a couple of reasons. Number one, we only have 6 weeks, which is crazy and wild to cover this much content in 6 weeks. But then also because we do need to tweak the course objectives here a little bit. So I've tried to kind of fit in between those and make sure you're getting the information that you need. So really, obviously, financial management is all about having folks in on staff in your C-suite, and then that report to that group that can help you to make good financial decisions for your organization. And because the healthcare industry is so different and unique in many ways, we're a healthcare in the U.S. is very much a capitalist, business, just like selling widgets. But the way we operate is very different. A majority of our organizations, at least in the hospital and integrated health system side, are all not for profit. So there's that piece. They're often, our consumer is not our customer a lot of the time. So our consumer is the person that uses the service item, whatever. So that's the patient, but oftentimes they are not the customer. The customer is really the insurance company a lot of the time. So that adds a cog, and then the fact that it's a highly regulated industry is also adds another cog. So lots of cogs in the wheels, and things to think about with regard to healthcare finance. So obviously we already kind of talked about that. Oops, sorry, I'm jumping around here. That the primary role of finance is really to maximize efficiency and value of the organization. We always want to be providing value to our patients, and we want to operate as efficiently as possible. And sometimes we need to look at those financial measures to be able to do that. So it might be looking at KPIs on a dashboard. It might be reviewing your budget with finance folks. It might be sitting down with planning staff and making decisions on how much you can afford to purchase new equipment or hire new staff or whatever it might be. So it's really all about figuring out how we are utilizing resources and planning for that, and making it efficient and valuable to the organization, and then also to obviously to the patients. So some of the activities that we see in finance, and you read about this in your textbook, so I won't belabor it, but it's not just budgets. It's everything from evaluation and planning, making decisions on investments, risk management. I worked in risk for a while, and understand a little bit about that. And sometimes even in clinical risk management, finance gets involved. But definitely when we're talking about risky activities that involve finance, involve dollars in some way, they're involved in that. Contract management, working capital, long-term investments, I think I already mentioned, financing decisions overall. And this is different than the role of the financial person even 30 years ago. Very different. Many times they were the number crunchers and the bean counters and all the horrible things that they were called. And that's all they did. They weren't involved in any of these other decisions, which is crazy. Finance is not just done in the finance department, it's done across the organization. So there needs to be contact and continuous discussion between managers and executives and finance folks across the board. So when we think about, we talked about this in the first week, not for profit versus for profit. Obviously, the main goal of a for profit organization is to make money. That's what they are for profit. They are there to make money, to maximize wealth for their shareholders. So a lot of when you think about organizations like Tenet or HCA, those are for-profit healthcare organizations that have stockholders. So their stockholders want they want the organization to make money so that they make money. In the not-for-profit world, so, I'm here in Orlando is where we live. So here in Orlando, we have Orlando Health and we have Advent, both of which are not-for-profit organizations. So technically, although they do both make money, not for profit doesn't mean you can't make money, but it does mean that the profits that you make need to be turned around and put back into the organization. Now, in the discussion in the first week, we had that discussion. The UPMC, and I had the opportunity. I won't say privilege; it wasn't my favorite place, but I did have the opportunity to live in the Pittsburgh area for a couple of years, and UPMC provides excellent clinical care. But for their CEO to make the kind of money that he makes, as well as have private jets and have his own chef in the penthouse of the building that they work in to make food during the day, and it's over the top. Not-for-profit organization, in my opinion, should not have a CEO that makes that kind of money and has those privileges. Actually, I like the show Succession. I'm not sure if any of you have ever watched that. It's on HBO. And just last night, we watched an episode where they're being forced to give up the private jets. So, I mean, that's not something that really is appropriate for an organization, especially since, although they like to fancy themselves this big international organization, they're really regional to the Pennsylvania market. So having a private jet so you can fly all over, probably not required by generally a regional healthcare organization. So, they do have international presence, but not to the extent that many others do that don't have that type of option available to them. So not-for-profit organizations, it's problematic when they are making such money and then not putting that back into the business or into the community or into their mission, but just putting it in the pockets of the executive. So that's problematic. But so we had talked in the discussion about how do you overcome that. You make new requirements for not-for-profit healthcare organizations to put X amount back into, make the charitable care and the community care guidelines more explicit. That's one way to deal with that. Not every CEO of a not-for-profit healthcare organization is making $1 billion a year with stock option, or not with stock options, with profit sharing options and having a private jet and a private chef. They make good money, but it's a tough job. I always wanted to be a hospital CEO until I got to work with them more closely, and then I decided no. So it is a tough job. You do deserve to get paid well for it. It's a lot of stress, but there needs to be limits, and I think that's some of what we're seeing, hopefully with some of that reform. Some of the other reform that we're seeing, obviously between the last administration and this current administration in Washington, we've seen a very different look at health reform. So during the Trump administration, there was a large push to keep it a very capitalistic organization in the healthcare world, get away from government subsidy, get away from government programs, abolish the Affordable Care Act, all those types of things. None of that really, a few things came to fruition, and honestly, the few things that did occur were likely good things. The Affordable Care Act had room to grow and change. It wasn't the greatest thing originally, not for the healthcare, the provider side of healthcare. But so we're still seeing some of these things change. Accountable care organizations are organizations across multiple, could be multiple physician practices, it could be multiple integrated health systems, but sharing some risk amongst the organizations so that the risk is shared but the reward is shared, and really pushing forward with high quality, responsibly priced healthcare for people. So ACOs are a big push, both on the Medicare side of the world, as well as generally in the U.S. right now, and can hopefully help us to provide care, more coordinated care at a reasonable price. Industry consolidation, you're going from, like here in this area, very few in the Orlando area. I can't speak for Lakeland really, but right in the Orlando area, very few private physician practices. Most have been bought up by Advent or Orlando Health. There are some, but not a lot. And so that's part of the consolidation. We're seeing organizations where it's an insurance company, and UPMC is a great example of this in Pittsburgh. An insurance company, multiple hospitals, hundreds and hundreds of physicians, long-term care facilities, durable medical equipment, all under the same roof. You would think that's a good thing, but it's really not, because it kind of creates a monopoly in some areas. Instead of decreasing cost, is what I would expect in that situation, it actually increases cost. So to the patient. So consolidation in some instances is good. When it goes too far, it's not, because we don't have any. There's no competition to drive down cost. Population health is obviously a huge aspect of health reform. We're going from an industry where we were responsible for making sick people well to now keeping well people well and making sick people stay well and not go back into the hospital and those types of things. So population health and some of the the aspects of that are really important. Wellness across the continuum, wellness in the community. What can we do? You need to look no further than the COVID crisis and the population health push. I mean, obviously, public health and the CDC are at the forefront of that, trying to keep the population healthy, and trying to push the accurate information into the media, as opposed to restating things. It's amazing to me how many people are getting all of their knowledge on some of these things, especially related to COVID, but just everything in general anymore. They get their knowledge from Facebook and Twitter and Instagram. And, kind of the joke is, okay, well, if you're going to rely on those areas for all of your medical knowledge, maybe the next time you need a surgical procedure, you can ask one of your Facebook friends to do it. So this is where, it's so important that we have population health and public health entities to push forward the accurate information and to share appropriate information in the industry to the public overall. So I use my mom as an example, because my mom is one of these folks. She's older, obviously. It's my mom, so she's in her 80s, and she reads Facebook all the time. She loves Facebook. That's really her only social media outlet, and she believes every single thing she reads on there. And it's sad. She, originally she kept emailing me and telling me, or texting me and telling me that COVID was fake, which obviously we know it's not. She would, send me all of these videos that people had recorded and put on Facebook, people calling themselves doctors. Well, I'm a doctor too. So, so it was always interesting. She would send me info, and I'm like, Mom, that person's not a medical doctor. They wouldn't say that. There are medical doctors that are spewing mistruths too, but there are also medical doctors that commit fraud and go to jail. So not every medical doctor out there is exactly what we need in the industry. But so my point is, I digress, as I often do, but my point is population health is really a focus of our industry, and not just secondary to COVID. We need to keep well people well, and the only way we can do that is by focus on the health of the population, because those well people aren't necessarily going to be running to the doctor to get advice. So they need to be able to get that information elsewhere, and good, solid information that's truthful. Clinical integration, that kind of leads back into that industry consolidation, but also integrating clinical teams. So looking at a team of people, that a care team that takes care of somebody, and care coordination. And that leads into the next bullet, which is technology. Technology is vital to care coordination, to population health, to industry. It's vital to everything. It's really so important that we make sure that we are using technology to our advantage, sharing good information amongst multiple clinicians of a same patient. Hopefully, at some point, we'll move into a situation where where all of the specific medical records for somebody can be shared no matter where they are, especially within the U.S. There's no reason that we shouldn't be able to do that. So your cousins from New Jersey come down here to vacation in Orlando, and one of them falls and breaks their leg. They can go to Advent facility, Orlando Health facility, get their leg X-rayed, and they can learn about what else has happened to that patient in their lifetime. They're allergic to this, they had this surgery, all those types of things that you would need someone to provide that history. There's no reason we should not, at this point, be able to manage that in a safe and secure manner. And staffing shortages, that's just going to unfortunately continue to get worse as people get burned out secondary to this pandemic. We're seeing massive burnout and overwork and stressed out folks in clinical settings, everywhere from the nurses' aides and and cleaning staff and all of that type of stuff, all the way up through physicians, nurses also being on the forefront of that. So staffing shortages, we already had staffing shortages in primary care physicians, in certified nurses' aides, in nursing overall, and it's just going to get worse as people leave the industry. So, how do we get money into the healthcare organizations? Like I'd said, the industry is very unique in that the people that consume the good are not the ones that pay for the good typically. There are a million different payers, and everybody pays in a different way. But generally, they're going to fall into two broad categories: fee for service or capitation. So fee for service payers pay either a cost base. Very rarely now are things cost based. Critical access hospitals, and that's about it. Generally, things aren't cost based, or charge based, which is more common, and prospective payment based, which is also more common. So those are fee for service, meaning that services provided, fees are paid to the providers. There's also capitation, where these are per member per month fees, where you agree to take care of patients of this health plan. And if the patient's assigned to you, then you get a per member per month fee that's paid to you every month, regardless of whether the patient comes in. So if they come in once a year for a physical, you're probably making money on them. If they're in your office 6 times a month, because they have a lot of chronic issues, or they have had an acute problem, so they're seeing you a lot, then you're not going to make money on that patient. But it all balances out, and that's the hope, that capitation is risk-based, but it all balances out. Cost-based reimbursement, obviously risk is minimal because you're getting paid your cost. So it should be pretty minimal. Charge-based reimbursement, the problem with that is oftentimes you'll see massive discounting to the insurers. And if you have a mass of people that have a certain insurer, if your discounts are too high, then the reimbursement will fall below costs. We do see per diagnosis, per procedure payments that especially on the inpatient side, these are secondary to the prospective payment systems. And in those instances, we have situations where the cost for the procedure or the cost for that inpatient admission are going to exceed the payment. And so the hope is that, okay, well, this patient exceeded it, but the next patient won't. So we'll make money on the next patient so we can cover the cost of that patient. We also see per diem payments, and the same problem there. We do see that in especially inpatient psych hospitalizations, inpatient rehab. In some instances, it'll be paid on a per day cost. Some patients, the cost will be below what the payment is. Some patients, the cost will be above what the patient is. So it all balances out. Bundled payments, so these are costs per episode. So if a patient comes in for, let's say they're coming in for a total knee replacement, so the fees associated could be the surgeon's fee, radiologist's fees, anesthesiologist fees, hospital fees, maybe pathology fees, depending on what the surgery involved. So instead of paying each one of those payers or each one of those providers individually, an episode based payment would pay all of it to one provider, likely the hospital. And the hospital will delve out the payments to everyone else. Then the hospital ends up losing money if it's a really expensive patient, if they're in the hospital a long time, et cetera. So it's that can be problematic as well. And then capitation, like I'd mentioned, sometimes with capitation payments, if this person's in a lot, then or has a lot of expensive stuff, you're going to lose money. If they rarely come in once a year for their well payment, you're still getting 12 payments that year for them. So it comes in for their well service, you're still getting those payments throughout. On the hospital side, we refer to inpatient hospitalization. Those are known as acute care services. So hospital acute care or inpatient services are paid under the Medicare program on a system called the Inpatient Prospective Payment System, or IPPS. These are paid based on diagnoses, as well as procedures performed. So you might have a medical DRG, which means that it's based solely on the diagnosis, or you might have what's called a surgical DRG. Those are based on the surgical procedures performed in conjunction with the diagnosis, but they're all called DRGs, which is diagnosis related group. Each patient that comes in gets paid a base rate based on their principal diagnosis code and the principal procedures performed. And it's paid a flat rate, whether they're there for a day or a month, you get paid the same if it's the same diagnosis code and the same surgical procedures. So you're paid a flat rate. There are some outliers for cost. If you use really expensive devices for the patient, you might be able to get an outlier, but pretty limited. Outpatient is similar, but it's not as restrictive. So the outpatient prospective payment system for Medicare is what's called the APCs, ambulatory payment classification. So so they actually are paid in a similar way. There's a base dollar amount, et cetera, but you can get paid for multiple APCs on a single day. So if a patient had 2 x-rays and a surgical procedure, you could get paid for both, the x-rays and the surgical procedure. The x-rays might be bundled and payment reduced, but you can get paid for both. So it's a similar system. It's a kind of a combination between a prospective payment system like DRGs and a fee-for-service system where you just get paid a flat rate. So kind of similar there. The true fee-for-service system that's still around here is the physician services, the physician fee schedule. Each service is represented by a CPT code or a HCPCS level 2 code. So these are medical codes that are driven from the narrative in the documentation. Each code has an assigned charge to it that would go into Medicare. Medicare applies the physician fee schedule, which is based on relative values. So they've looked at work, practice expense, and malpractice costs and assigned a relative value unit. So a relative value unit for an office visit where you're just going in and getting checked out might be 2, and a relative value unit for an open heart surgery might be 102. So they're based on the resources associated with that particular service, and so that's how and then a dollar amount is applied to those RVUs. So that's how that's calculated. They're all calculated in a certain way nationally and then adjusted geographically. So it obviously costs more to provide services in New York City than it does to provide services in Montana. So the payments are adjusted accordingly based on geography. Value-based purchasing, another term really important to know of. We're moving from a volume-based system, like we see with this, the more visits you do, the more things you do, the more you get paid, to a value-based system, meaning that the reimbursement systems are tied to performance standards, high quality, not abusive practices in test ordering, all of those types of things. Value-based purchasing is is very much the future of the healthcare system, and they use specific types of financial incentives to encourage good behavior on behalf of providers. So working more efficiently and cost effectively are those value-based purchasing, those types of systems. Okay, almost done. Just want to talk about a few financial concepts. This kind of comes from the work from last week, and also just some real basic things, and then just kind of talk generally about some of the things in our hard copy textbook. So we really, the hard copy textbook is the one that was assigned to the class. Probably wouldn't have been my first choice, especially for an intro class of this nature. So that's why you see some of that other textbook in the classroom, some sections from that. Those can be helpful. And then also, if you're really unfamiliar with some of these things, I've tried to post up some kind of additional resources from the web that can be helpful as well. But also, if you have questions, please feel free to reach out. I've heard from some of you. I haven't heard from everybody. So if you do have questions on things, feel free to reach out. So assets, liabilities, equity, and revenue, four really important concepts. Everyone needs to understand what they are. So the assets are the things that we have that are valuable. So it could be cash. That's the best asset, obviously. But it could be things like equipment, buildings, anything that we own that provides value. So those are our assets. And we're going to offset that with our liabilities. So what are our obligations that we're paying? Things like rent, debt, like if we own a building, do we owe money on it? Those types of things. The fixed financial obligations of the organization are considered liabilities. So assets minus liabilities is equity. So here's what we possess. Here's how much we owe. Here's how valuable it is. So we can create that in our own personal lives too, right? Here's how much cash on hand I have. Here's what I own. I own a house. I own a car. I have, retirement accounts, etc. But here are my liabilities, 6 figures in student loans, car payment, all the things, the rent or mortgage, whatever. And then ultimately we can figure out what our equity is. How much are we worth? That's how they calculate net equity when you see those kind of calculations for people online. So equity is really the book value of the business. How much is it worth? Revenue is also really important to know about. Revenue is the money coming in. So for us, patient service revenue is our most important revenue, and patient service revenue results from us providing services or items and the money coming in from that. So revenue is accounts receivable is our revenue, and that's the money flowing in from the goods and services we provide. You'll see the term GAAP, or generally accepted accounting principles, throughout different areas of our text. And this is really just the set of guidelines that creates consistency in accounting. I am not an accountant. I don't claim to be an accountant, but I have worked in finance, and I do have a financial background. I worked in compliance for a long time. So I don't, I'm far from an expert on every aspect of the generally accepted accounting principles. But what I do understand about it is that it is really the key, and kind of comes to us from the SEC, who is the government agency that oversees accounting and the stock market and all sorts of different things. But their focus is really on making sure there's consistency. So I can compare this business to this business, and that the balance sheets and the other types of financial statement of cash flows, or the income statement, or all of those things will have been presented and created in the same manner. So folks that are CPAs, they abide by generally accepted accounting principles, and anybody that's doing accounting work should. A couple other things, cash accounting versus accrual accounting. So cash accounting, or cash basis accounting, a lot of small businesses use cash accounting. It's about the recording of the events that happen within that organization when a cash exchange takes place. So let's say patient comes in to see us, they have a surgical procedure in January. Or let's say even in December. This could make it even more interesting. So they come in December. We book that to AR in December, meaning that we are owed that money. in December. But then in January, we get the payment. With a cash accounting system, we wouldn't book that until January because we didn't get the money until January. So when the cash comes in is when we would book it at that point. That's problematic if you've crossed over fiscal years. If your AR was from 2020 and you're talking about now a payment in 2021, it isn't as accurate as opposed to accrual accounting, which is a recording of the economic events when the event occurred, even if we didn't get paid for the next month or forever in many cases in healthcare, unfortunately. But so accrual accounting is about recording an economic event when it occurred, in the period when it occurred, as opposed to when we get paid for it. This is the preferred method under generally accepted accounting principles, mainly because of things like that, like a situation where it would cross over quarters, because obviously quarterly reporting is important in accounting, or cross over fiscal years. That could be really problematic. So those are key concepts. And most organizations use accrual-based accounting. Operating income and non-operating income. This is not as crucial for healthcare. I mean, it is, but you won't see it so much. If you work in finance, you'll see it in healthcare. Generally, the income that we see as managers in healthcare, in the healthcare setting, would be operating income. So it would be related to the patient services that we see in our organization or in our unit. Non-operating income in healthcare tend to be either development funds, so contributions coming in perhaps to our foundation, or investment income. So if we invest in something, bonds or whatever it is that we might invest in, another organization, et cetera, we make money off that. That's non-operating income. Operating income are those dollars that come into our organization, those earnings that are directly related to our core activities. So patient services and items to patients, that would be operating income. And that tends to be what we're really interested in, really important, that are really important to us. Financial condition analysis. So hopefully some of the information in that those chapters I put online could help you to get ready for the info in the financial condition analysis chapter. It can be really overwhelming if finance isn't your thing. And I guess what I encourage with all of my assignments, and you haven't seen this yet because I'm a little behind and I do apologize for that, but with my assignments, I don't look at it and say, oh, that's completely wrong. If you can explain to me why you've done something, or look at it from an analysis standpoint, analyze something and tell me why you think this is correct, I'm going to be less, I'm going to have less of a problem if your decimal point is one off, or if you're whatever it happens to be. So what I'm looking for here is not a bunch of math and memorization of ratios and that kind of stuff. All of our assignments are narrative in nature. So you might have some calculations you need to do, but if you're doing a calculation, explain to me why you're doing that. If you're unsure which one to use, say, well, this is the one I chose and here's why. Here's what we learned in the textbook that said to use the DuPont or whatever, to use an ROA, and here's why I chose to do that. So in that chapter, in chapter 13 of the textbook, which was last week's assignment, there's tons of ratios. I'm not expecting you to know every single ratio and exactly what it does and whatever. What I do want you to do is to make sure that you review the concepts on page 543 and 544, which are all the detailed elements. Each chapter has that kind of section. When you finish reading a chapter, go read through that section. Is there something that's completely foreign to you in that? If so, then go back and read that part of the chapter again. But review those and understand the existence of those ratios, liquidity ratios and assets ratios and all of those different things. Understand their existence and think of when we would use them. I'm less worried about you understanding how to make the calculation and more about analysis here. How might we use some of these ratios, or why might we ask our finance department for information on the ratios so you can understand that. So that's what I'm really focused on. There's lots of ratios in that chapter. Also, it's important to understand the various types of financial statements. The three biggies, obviously, balance sheets, income statements, and a statement of cash flow. So understand those, but understand the figures that go into them that we might see on a dashboard. So the balance sheet's something that can change every single day. Now, you may have a dashboard in your organization that'll show you that balance sheet every day, or the cash flow statements. Like you'll be looking at those going on forward as managers, and especially if you reach the point as of a C-suite manager, you are going to be looking at those things once a week in your senior staff meeting. So you will be looking at them all the time, even though you're not a finance person, unless you happen to be the CFO. You are likely going to be looking at those almost every single week to figure out what's going on, at least when they're presented by the CFO each week. So just understand what they are, how we use them. Like I said before, you're going to have another finance class in your MBA program if you haven't already taken it, where you will get more detail on how to do these kinds of things than you probably want. But just know here, we want you to be able to understand what they are and how to look at them. And then your final project for class is going to be one of the cases out of the Pink and Song Cases textbook, which if you don't have that and you need that information, reach out to me. It's in the syllabus, but I understand the bookstore messed up with listing the textbooks. Definitely reach out to me if you need that. It is in the syllabus printed in the classroom, but reach out to me if you need information in that regard. It is our assignment for week 3 as well. Your final assignment is going to be analysis of financial statements. So you definitely want to understand what they are and how they come into play and why we would be looking at them in the hospital. So I think that's all I've got. That was a lot of information. I apologize, but I like to put up a video each week, and I haven't had the opportunity to do so. So just some basic info. Hopefully it's helpful. If you have questions, please feel free to reach out, text, email, call, however you would like to reach out is fine. I'm happy to meet with students via Zoom, or I'm not on campus in Lakeland, so if you're there, you won't find me. But you certainly can. I'm happy to meet via Zoom at any time. And that's it. So any questions, please just let me know. Thanks so much.